Hello and welcome to Stocks Advisor. Today we'll talk about CANO Health Incorporated, ticker name CANO. So, what's happening here? We see a very nice classical movement upwards with clear trend lines, clear channels, but there are buts always. So let's have a look what we have here and how to trade, what to expect. So first of all, of course, we can say there is a channel and this is here. So let's quickly draw it. We see this one clear positive channel, which was followed by some negative action we saw here from actually October or even mid of September of previous year, and now it's finally turned. But the question is now what's next, because if you look more carefully here, we just pierced today upwards moving average 200. All parameters are very accelerative. Actually, moving average 20, 50, green and blue line also goes up. Everything is going up, boosting. But the risk is in these patterns when you pierce moving average 200 is that it could be, first of all, bears start to attack, shorts start to attack because they know the buying capacity is out. Also, RSI is kind of heading towards 80 plus, so meaning that people might start taking profit. Also, this is the classical technical pattern when people start indeed taking profit, and you see 3 times volume is quite high, so also might be that buying capacity is a little bit drawn. With this being said, it still might go high. Of course, it could be really market overreaction going high because there is still very strong level of 9 which was not reached, obviously in the vicinity of 9 if we go there, but the risk is there, and as a technical traders we are not taking risks, we trade on technical levels actually. And with this being said, what might be happening, it still could be a very quick move upwards, but then it could show so-called shooting star candle, so very high upwards shadow and then very small body, and it means the immediate decline might happen, could be very fast, but usually these kind of declines are very profitable if you know when to buy, if you're patient enough. If not, of course, you will be losing money. And this means that the first entry level here, it should be, or rather safe to buy, will be exactly this one, because this always was either a support or a volatility level. So this between 498 and 528. That's where I would buy first time. Then of course rebounds will start, and we might retest again moving average 200. If we pierce further, we can go even higher, but again, I would never advise to keep longer than 10% if you are a technical trader. What might be also happening, it could go even lower. For that, we need to demagnify a little bit. If it happens, it would mean actually that we can pierce through the channel, through this upwards going channel, and go lower. In this case, we need to look on the levels where the previous, let's say, support levels were formed. And here we see this triangle formed by these two lows and actually this one, though it's quite sharp, but this is the triangle where we need to look for next entry. This would be our second entry opportunity if we really have a very nasty declining action. And here we don't have really like a third level, also called doomsday scenario, where we keep money to buy. At the third level, I would just keep it, let it be anywhere below this lowest line. So this is indeed the way to trade. The first technical between 498, 528, and anything below this third dark line would be immediate buy again to average down, and anything below the second line would be also buy again to average down again the third time, so-called doomsday scenario. Then it should be rebouncing back because it would mean very strong volatility here. But overall, I don't expect to go lower than this second line actually. So these are 3 levels to buy. Again, how to trade, we usually advise so-called non-linear averaging down. For those who are not first at our channel, they know what it means. Again, classical trade, 5 portions. You buy with 1 portion in the first channel, with 2 portions at the second line, and with another 2 portions at the third line, just to avoid some nasty actions. This way, when the final rebound takes place, you will be able to cover your losses, but also make your profit. This being said, this is the way. Again, momentarily unclear, more bullish than bearish, still can't overreact and go higher, but if you look historically for this ticker, it's not really happening many times. Usually it's just after piercing through moving average 200, it might still do something and then go down. If the immediate reaction will be, that will be the trade. If no, well, it will go higher a little bit and then the real decline will start. So then we really need to reevaluate the stock. But for the moment, if you want to trade safe and if things go as we discussed, this will be the way of trading. With this being said, good luck with CANO. That's all for it. If you like what you see, if you like the way we analyze and the way we advise trading, we enter and try to mitigate, let's say, profits and losses. Don't forget to subscribe to our channel, press the bell button, and see you in another episode of Stocks Advisor.